The global trade landscape is in constant flux, shaped by economic forces, political maneuvering, and strategic alliances. The rise of protectionist policies, coupled with geopolitical tensions, has introduced an element of uncertainty into the global market. One of the most significant bilateral relationships in this shifting landscape is that between Russia and China. While China has emerged as a global economic powerhouse, Russia has sought to reduce its reliance on its eastern neighbor. This dynamic has set the stage for a potential realignment of global trade, with far-reaching implications for both nations and the world at large. The intricate dance between cooperation and competition that characterizes the Russia-China relationship is now playing out on the world stage. Understanding the forces at play in this complex relationship is essential for comprehending the future of global trade. Russia's recent imposition of a 55% tariff on Chinese furniture parts has sent shockwaves through the global market. This bold move signals a potential turning point in Russia-China relations, raising questions about the future of their economic partnership. The tariff, targeting a specific sector of Chinese exports, is widely seen as a calculated maneuver by Moscow to bolster its domestic industries. The move has been met with mixed reactions, with some analysts lauding Russia's assertiveness, while others warn of potential economic repercussions. The Russia-China relationship, once characterized by a shared desire to counterbalance Western influence, is now navigating a more nuanced reality. The imposition of this tariff raises a fundamental question. Is this a sign of a deeper rift between Russia and China, or a strategic maneuver within a complex but ultimately resilient relationship? The global trade landscape is being reshaped before our eyes, and the outcome of this economic maneuvering will have profound consequences for all involved. Whether the 55% tariff marks the beginning of a trade war or a recalibration of the Russia-China relationship, it serves as a potent reminder that the global economy is entering a new era. The world is watching closely as these two economic giants navigate their evolving relationship. The decisions they make will have ripple effects across the globe, influencing everything from supply chains to geopolitical alliances. The 55% tariff imposed by Russia on Chinese furniture parts is a significant economic lever, designed to reshape trade flows and bolster domestic industries. By making Chinese furniture parts more expensive in the Russian market, the tariff aims to create a more favorable environment for domestic producers. This strategic move has the potential to reshape the furniture industry within Russia, impacting both consumers and businesses. It reflects a calculated approach by the Russian government to address several interconnected economic and geopolitical objectives. Such a substantial tariff is a decisive action that carries the weight of potential consequences and reactions from both Chinese businesses and the global market. The selection of Chinese furniture parts as the target for this tariff is not arbitrary. Russia's furniture industry has, in recent years, become increasingly reliant on imported components, particularly from China. This reliance on Chinese imports has created a strategic vulnerability for Russia. By targeting furniture parts specifically, the Russian government aims to revitalize its domestic furniture industry. By making Chinese imports more expensive, the tariff aims to incentivize Russian furniture manufacturers to source components domestically. This targeted approach seeks to address a specific vulnerability in the Russian economy while minimizing disruption to other sectors. The protection of domestic industries is a primary driver behind Russia's decision to impose the 55% tariff. In a globalized economy, domestic industries often face intense competition from foreign counterparts. The tariff on Chinese furniture parts is a clear indication of Russia's commitment to safeguarding its domestic furniture industry. By increasing the cost of Chinese imports, the tariff aims to level the playing field for Russian manufacturers. This move aligns with a broader trend of rising economic nationalism worldwide. The imposition of a 55% tariff on Chinese furniture parts represents a calculated gamble for the Russian economy. Russian furniture manufacturers stand to gain from a more favorable competitive landscape, potentially leading to increased production and job creation. However, consumers may face higher prices and limited choices as the tariff takes hold. The success of this gamble hinges on the ability of Russian manufacturers to capitalize on this newfound protection. The effectiveness of this strategy will depend on a multitude of factors, including the response of Russian manufacturers and consumer behavior. One of the primary objectives of the 55% tariff is to revitalize Russia's domestic furniture manufacturing sector. By increasing the cost of these imports, the tariff aims to level the playing field for Russian manufacturers. This protectionist measure is intended to stimulate investment, innovation, and job creation within the Russian furniture industry. With Chinese competition at bay, Russian furniture makers may now have the breathing room they need to modernize their operations. The success of this endeavor will depend on the ability of Russian manufacturers to seize this opportunity and transform their operations. The 55% tariff on Chinese furniture parts presents potential drawbacks for Russian consumers. As the tariff takes effect, consumers are likely to experience a rise in prices for furniture. This price hike could impact consumers across different income levels. The extent to which consumers feel the pinch will depend on various factors, including the availability of alternative sources for furniture. Finding the right balance between protecting domestic industries and ensuring affordable access to essential goods will be crucial. The imposition of a 55% tariff on Chinese furniture parts is unlikely to go unnoticed or unanswered by Beijing. Retaliatory measures from China are a distinct possibility, potentially targeting key Russian exports or industries. Such retaliation could take various forms, including tariffs on Russian goods entering the Chinese market. Navigating this complex geopolitical and economic landscape will require deft diplomacy and strategic foresight on the part of the Russian government. Maintaining open lines of communication with China will be crucial for mitigating the risks of retaliation. The 55% tariff on Chinese furniture parts represents a strategic bet on the long-term trajectory of the Russian economy. The success of this gamble will depend on the ability of the Russian government to strike a delicate balance between protecting domestic industries and managing consumer prices. In the long run, the sustainability of this protectionist measure will hinge on the ability of Russian manufacturers to transform themselves into competitive players in the global marketplace. This will require ongoing investment in innovation, research and development, and workforce training. Only time will tell whether this strategic gamble will pay off, shaping a more resilient and self-reliant Russian economy. The reverberations of Russia's 55% tariff on Chinese furniture parts are felt most acutely in the bustling factories of China. For years, Chinese furniture part exporters have benefited from the insatiable demand of the Russian furniture industry. This sudden and substantial tariff forces Chinese businesses to grapple with the new reality of reduced access to a once reliable market. The immediate impact is likely to be felt in the form of declining orders, as Russian furniture manufacturers explore alternative sourcing options. The Chinese government is likely to explore various options to mitigate the damage and support its affected industries. Parts fallout navigating the Russian market shift. The 55% tariff presents a significant challenge for Chinese furniture parts exporters. The once predictable flow of goods now faces a formidable barrier. Chinese businesses must reevaluate strategies and adapt to a new reality. Some may absorb the tariff, accepting lower profit margins. This strategy carries risks, potentially eroding profitability. Others may explore alternative markets to diversify their customer base. Agility and innovation are crucial in this period of adjustment. Chinese exporters must analyze trends, explore partnerships, and invest in upgrades. The Russian tariff, while undoubtedly disruptive in the short term, could serve as a catalyst for China to accelerate its ongoing efforts to diversify its economy and reduce its reliance on export-led growth. For years, China has recognized the need to shift from a model heavily dependent on manufacturing and exports towards one driven by domestic consumption, services, and innovation. This tariff, while unwelcome, could provide the impetus for China to double down on these efforts. The Chinese government has already implemented policies aimed at boosting domestic consumption, fostering innovation, and developing strategic industries such as technology, renewable energy, and high-end manufacturing. The tariff could further incentivize these efforts as China seeks to create a more balanced and resilient economy, less susceptible to external shocks. This could involve investing in research and development, promoting entrepreneurship, and nurturing a skilled workforce capable of competing in high-value-added sectors. This transition, while challenging, presents a significant opportunity for China to move up the value chain, becoming a global leader in innovation and advanced manufacturing. By investing in its people, infrastructure, and technological capabilities, China can position itself to thrive in a rapidly changing global economy, one where adaptability and innovation are paramount. Trade war, calculating the risks. The 55% tariff on Chinese furniture parts injects uncertainty into the economic relationship between Russia and China. Both nations have a vested interest in stable trade ties, but escalation remains a possibility. A trade war could disrupt supply chains, increase prices, and dampen global trade. The international community urges restraint and dialogue to avoid further escalation. For innovation, turning challenge into opportunity. While the immediate impact of the 55% tariff on Chinese furniture parts is undoubtedly disruptive, it also presents an opportunity for Chinese businesses to innovate, adapt, and emerge stronger from this challenge. The Chinese economy, known for its dynamism and entrepreneurial spirit, has a proven track record of transforming adversity into advantage. This tariff, while unwelcome, could serve as a catalyst for a new wave of innovation and competitiveness within China's furniture industry and beyond. Faced with the increased costs of exporting to Russia, Chinese furniture part manufacturers may be incentivized to invest in research and development, exploring new materials, production processes, and designs that reduce costs, enhance quality, or offer unique features that differentiate them from competitors. This could lead to the development of innovative furniture components that not only meet the demands of the domestic market, but also open up new export opportunities in other countries. The tariff could also spur Chinese businesses to explore new markets and diversify their customer base, reducing their reliance on any single trading partner. This diversification, while initially challenging, could ultimately strengthen the resilience of Chinese businesses, making them less vulnerable to economic shocks and geopolitical tensions. The 55% tariff imposed by Russia on Chinese furniture parts is not merely an isolated trade dispute. It reflects a broader geopolitical calculation by Moscow to recalibrate its relationship with Beijing and reduce its economic dependence on its eastern neighbor. For years, Russia has watched as China's economic and geopolitical might has grown exponentially, transforming the dynamics of their once seemingly ironclad partnership. This shift in power dynamics has fueled a sense of unease within Russia, prompting the Kremlin to seek ways to assert its own economic independence and reduce its vulnerability to Chinese influence. The tariff on furniture parts, a seemingly niche sector, serves as a symbolic and strategic shot across the bow, signaling to Beijing that Moscow is no longer content to be a junior partner in a relationship increasingly skewed in China's favor. This reorientation of Russia's geopolitical compass has profound implications for the global balance of power. As Russia seeks to diversify its economic partnerships and reduce its reliance on China, it will inevitably forge new alliances, strengthen existing ones, and potentially reshape global trade patterns in the process. This strategic maneuvering by Moscow has not gone unnoticed in capitals around the world, as nations assess the implications for their own economic and geopolitical interests. The escalating trade tensions between Russia and China have set in motion a realignment of global trade, as nations adjust to the evolving geopolitical landscape and seek to capitalize on new opportunities presented by this shifting dynamic. For Russia, reducing its dependence on China necessitates cultivating alternative markets for its exports and securing new sources for imports, particularly in sectors where it is currently reliant on Chinese goods. This diversification strategy has led Russia to strengthen ties with countries such as India, Turkey, and Brazil, all of which offer potential as both export markets and import sources. Russia is also deepening its economic engagement with countries in Southeast Asia, Africa, and Latin America, seeking to forge new partnerships and expand its economic footprint beyond its traditional sphere of influence. This reorientation of global trade flows is not without its challenges. Building new trade relationships takes time, investment, and a willingness to navigate cultural differences and overcome logistical hurdles. Moreover, Russia's actions are likely to elicit a response from China, which is unlikely to stand idly by as its economic interests are challenged. Supply chain shuffle, adapting to uncertainty. The trade spat between Russia and China sends ripples of uncertainty throughout the global supply chain, which has become increasingly interconnected and reliant on the smooth flow of goods and services across borders. The imposition of tariffs, the threat of retaliation, and the potential for a full-blown trade war between these two economic heavyweights has businesses around the world scrambling to assess their exposure and develop contingency plans. Companies that rely on Chinese-made furniture parts, for instance, now face the prospect of higher costs, supply disruptions, or the need to find alternative sources for these components. This could lead to production delays, increased prices for consumers, and a decline in profitability for businesses operating within affected sectors. The ripple effects of this disruption could extend far beyond the furniture industry, impacting sectors such as construction, real estate, and retail, all of which rely on a steady supply of furniture and related products. The uncertainty created by the Russia-China trade tensions highlights the vulnerabilities of a highly globalized and interconnected economy. Businesses are increasingly recognizing the need to diversify their supply chains, reduce their reliance on single suppliers, and build in greater flexibility to adapt to geopolitical shocks and economic uncertainty. The implications of a Russo-Sino trade war. The escalating trade tensions between Russia and China have captured the attention of the international community, prompting concerns about the potential for a trade war between these two economic powerhouses and the implications for the global economy. A full-blown trade war between Russia and China would have far-reaching consequences, disrupting global trade, fueling inflation, and potentially undermining the fragile post-pandemic economic recovery. The United States, the European Union, and other major economies are watching this situation closely, urging both sides to exercise restraint, engage in dialogue, and seek a negotiated solution that avoids further escalation. The International Monetary Fund and the World Trade Organization have also expressed concerns about the potential for a trade war, warning that it would harm global growth and undermine the rules-based trading system. The outcome of this trade dispute will have significant implications for the future of global trade and the rules-based order that has governed international commerce for decades. A negotiated settlement that addresses the legitimate concerns of both Russia and China would help to ease tensions and maintain stability within the global trading system. However, a protracted trade war would have far-reaching consequences, potentially leading to a fragmentation of the global economy, a rise in protectionism, and a shift towards a more uncertain and volatile trading environment. The 55% tariff imposed by Russia on Chinese furniture parts marks a watershed moment in global trade dynamics. Russia's bold move signals a recalibration of its economic relationship with China. This decision reverberates through the global economy, prompting nations to reassess their economic strategies and alliances. The era of unfettered globalization is giving way to a more complex landscape. Economic nationalism is rising, reshaping global commerce. The world watches as these giants navigate this new terrain. The 55% tariff imposed by Russia on Chinese furniture parts serves as a stark reminder of shifting sands. Traditional alliances are being tested, redefining global trade. The global economy is entering a new chapter of cooperation and competition. Dialogue and diplomacy are key to navigating this complex landscape. The world is watching, eager to see if this dispute will lead to a more equitable global trading system.